Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is Wednesday, February 22nd. Today we are going to take a look at Exxon Mobile out of the energy sector. Let's jump right in the video. And before we jump in, I wanted to say thank you to everyone who has subscribed to the channel. And if you have not subscribed to the channel yet, go ahead and hit that subscribe button down below. Hit that notification bell. Hit the thumbs up if you find value in the content at any time, and drop a comment down below. Let me know what you think of Exxon Mobil. Is it in your portfolio? Are there other companies in the energy sector that you prefer? Go ahead and drop it all down below. Now let's jump into the video. So if you want to check them out on their homepage and find out more about them, check them out. Corporate.exxonmobil.com is their homepage where I pulled this information from. ExxonMobil, fueling the world safely and responsibly. Access to energy underpins human comfort, mobility, economic prosperity, and social progress. It touches nearly every aspect of modern life. Over the course of its long history of more than a century, ExxonMobil has evolved from a regional marketer of kerosene to an advanced energy and chemical innovator. I actually remember back in the day, whenever I was a kid, we used kerosene to heat our house on some winters whenever it got pretty cold. It was pretty nasty smelling stuff, if I remember correctly. One of the largest publicly traded companies in the world, an industry leader in almost every aspect of the energy and chemical manufacturing businesses. We operate facilities or market products in most of the world's countries, explore for oil and natural gas on 6 continents, and research and develop next generation technologies to help meet the dual challenge of fueling global economies while addressing the risk of climate change. Worldwide, ExxonMobil markets fuels, lubricants, and chemicals under the 4 brands Esso, Exxon, Mobil, and ExxonMobil. And some of the things I like about them, obviously they're in oil and natural gas. I mean, if you drive around, you see here in America anyway, you see the ExxonMobil stations. Esso are some of the stations overseas. They're on 6 continents, right? So they have a worldwide presence, and they are one of the larger energy producers out there. And I don't think energy is going anywhere. We all are driving gas-powered cars for the most part. I know electric vehicles are coming down the pike, but I don't think gas is going to be going away, at least probably not in my lifetime. And they also provide some chemicals for other things, like LyondellBasell uses some of their, the chemicals produced for plastics, for example, would come from gas products. We are talking about ExxonMobil Corporation, ticker XOM, out of the energy sector, and we are taking a look at them because they are down 1.3% on the day. A lot of red in the market again today. Again, I think yesterday I may have misspoken and said a bear market, but I believe, or a bull market, but we are in a bear market. We are going to continue to go down, in my opinion. There should be some buying opportunities at least over the next quarter or two, I would think, as long as the Fed is going to continue increasing rates and inflation is elevated. I believe we are going to be in a downtrending market until that levels back out, inflation comes back down, and the Fed halts rates. And I think they're going to get above 5% into the 6% range. When I bought my first house back in 2003, I believe it was, in Utah, whenever I was still in the military, my rate was a little over 7% whenever I first bought, and I remember I refinanced a couple times as the rate was falling down to low 6%. So these are normal rates. The Fed rate typically runs from about 4 to 5%, so we are just starting to get into that range of what is considered historically normal, right? We'll probably have to get a little bit higher than historic normal to bring inflation back down around the 2% range that the Fed wants it. But anyways, enough about the Fed and the rates. Let's jump back into ExxonMobil. 52-week range as low as $74.03, as high as $119.63. And I will also say I do not currently own ExxonMobil. You'll see that here in a minute. But I was buying them a couple years ago, in 2021 now, at this $74 to $78 range. I actually rode them all the way up to about 98 and sold out of the position, taking a little bit of that profits and rolling into some other positions. And I would like to add them back in at this $78 to $80 range. I would like them, but currently I think it's a little overvalued. We'll see what the other opinions are around that here in a moment. Average volume is 17.1 million. Today is 12.3. Market cap of 447.91 billion. So they are a large cap here. A beta of 1.10, so more volatile than the overall market. That's what beta means. It's just the volatility of the market overall. A 1 is the market. Anything above 1 is more volatile. Anything below 1 is less volatile. Price to earnings ratio, PE 8.28. Very nice price to earnings ratio, actually. Pretty low here. Earnings per share is $13.26. Nice high earnings per share. And they are, I did some research on these guys whenever I bought them back a couple years ago. They are set up to be profitable around $40 to $45 per barrel. I believe we're in the 80 to 90 range. So they are definitely profitable at these ranges, even if they were to pull back into the 70 or $60 range. Like I said, they're set up to be profitable around $40 to $45 per barrel of oil. Earnings date is coming up April 27th to May 1st. Forward dividend is $3.64. They are a quarterly payer, and their yield is 3.27%. Now, when I bought these Exxon Mobil back at the 74 range, this was over 4%. So again, the lower you can buy them, the higher that yield, and the higher the potential future returns. Ex-dividend date of February 13th, so we've missed that one. You would not get the next dividend if you bought them now. You would have to wait for the following. And a one-year target estimate, at least according to Yahoo Finance. I am not affiliated with Yahoo Finance, just one of the sources I like to go to for information. They have a target estimate of $126.23 per share. Now, I always recommend more than one source, so another source that I like is stockanalysis.com. Again, not affiliated with stockanalysis.com, just another source that I like. You can go out and check out your own sources. Seeking Alpha, I know people like. Google has a source. You know, there's all kinds of sources out in the market. One that I'm looking at possibly buying a subscription in is Fast Graphs. I like the way that they present information in a graph form, and you can look at projections and forecasts and kind of see where the stock is, whether it's fair valued based on future earnings or whether it's pulled back or whether it's overvalued based on future earnings. So I do like that service. I have not played around with it or taken the plunge yet to buy that. I don't like to buy what I can get for free, but I'm trying to figure out if they offer more information than some of these free sites do. So as soon as I figure that out, I'll let you know. And if I do purchase it, another big one will be whether or not they'll let me to use it on the channel to provide information to you as well. So I'm going to reach out to them and see what that looks like. Now, according to stockanalysis.com and the 33 stock analysts that have taken a look at this, they call it a consensus buy. And if you do go on this site, you would be able to click on these, you know, the deep red, yellow, which is hold, green buy. This would be a sell. Buy, strong sell, and you'd be able to see how many of these 33 stock analysts are in each category, right? But consensus overall is a buy. They have a low estimate of $110.09. Currently, it sits lower than that, and if it went back up to their low estimate, it would be a 0.33% increase in the stock price. They have an average estimate of $128.37. That would be a 16.99% increase in the stock price. That's pretty in line with what we saw from Yahoo Finance. And if it happened to hit the high of $149.10, that would be a 35.88% increase in the stock price. All the while, you would be collecting that 3+% dividend yield. Now, as I stated, I don't currently have a position in here. I did sell out of them late last year whenever it got to around 90, just under $100 per share. I'm not perfect at timing the market, right? Sometimes I don't buy right at the low, and I don't often sell right at the high, right? I don't often sell. I did sell one position this week, so check out my Sunday stock portfolio update to see the movements in my portfolio, and hit that subscribe button so that and hit the notification bell so that you are made aware whenever that comes out. So usually it's every Sunday morning about 7:30. So tune in for that. Now, some things I do like about them: low payout ratio, 28.7%. Anything below 30% is very nice in my opinion. I don't like the slow dividend growth, but at least it's growing. Actually, slow dividend growth is one of the reasons I sold out of the company that I sold out of this week. And you can see here last year around August, they were paying 88 cents. They did raise it to 91 cents. That's what they're currently paying out, and they are a quarterly payer. So again, I like this one around, I would say under $85 per share. That's where I would be interested. I might start nibbling in 90 if it dropped back into there. But currently, I feel it's a little overvalued, at least for me, compared to some of the other positions already in my portfolio that I want to build out. That's just my opinion. You make up your own decision. Let me know what you think. This is vested interest. Sorry, I hit that a little soon. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Hopefully, you have started your own journey as well. And if you have not started your own journey to financial freedom and do not have a brokerage account, there is a Webull link down below if you use that link, deposit some money into that account, start account, deposit some money into the account. I'll get some free stocks. You'll get some free stocks. It is a way to help out the channel. But a bigger way to help out the channel really is to hit that thumbs up, hit the notification bell, share with anyone you think might find value, drop a comment, and subscribe to the channel. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and management purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice counsel of a certified financial advisor.